discussed certain important types of direct taxes as well as indirect taxes. That is, in case of direct taxes, we have discussed income taxes, that is, individual income taxes. Then we have discussed the idea of the corporate taxes, why government of India has reduced corporate taxes, right? Earlier it was 30% uniformly applicable to every company. Then it was reduced to 25%. Then it was changed for some of the companies to 22%. For some of the companies it is 30%. And for some of the companies which will start manufacturing, it is 15%, etc. Now, apart from that, we also discussed, right, the concept of capital gains tax. Capital gains tax. What is a capital gains tax? Simple. You purchase an asset, hold the asset for a certain duration, and then sell the asset. Now, when you purchase the asset, the price would be lower. When you sell the asset, the price would be higher. And after indexation, whatever is the capital gains, that is the difference between the selling price and the buying price, the difference between that, on that amount, the taxation would be imposed by the government, which is called as capital gains tax. After that, we have discussed a concept of tax avoidance, right? Tax avoidance. What is tax avoidance? The tax avoidance basically refers to certain actions of the taxpayers, as a result of which the tax liability on the taxpayer will automatically come down. But none of these actions are illegal, right? All are illegal. None of these are illegal, but these are unethical. Right, in the tax avoidance itself, we have discussed, right, what is the importance of minimum alternate tax, right? What is the concept of a GAR, General Anti-Avoidance Rules? Then we have discussed the concept of the base erosion and profit shifting, and the BEPS action framework, where there are 15 pillars, and we are using the 15 pillars to address the issue of tax avoidance. After that, we started with the GST, Goods and Services Tax, right? The GST, Goods and Services Tax. Now, before understanding GST, we discussed two very important concepts. That is, one, the idea of an input tax credit, and the second one is cascading effect. Cascading effect simply means there is a tax, right? In the price, there is already a component of a tax. On this component of a tax, we are again imposing tax. Okay. Cascading is very simple idea. Do not complicate it. In the price, there is already a component of a tax. On this tax, we are imposing taxes again. So when we impose a tax on existing tax, it is called as cascading effect. Now, problem with the cascading effect is very simple. The market prices would be higher. The tax burden on the customer would also be very higher. In order to address this, I said we introduced a concept of a VAT system, value added taxation. VAT system, value added taxation. Now, before I go forward, please tell me, all of you are okay with VAT? VAT was basically implemented by the states, right? I hope you remember this. VAT was implemented by the states. Why? States had concept of a sales tax. The states had concept of a sales tax, and this sales tax was replaced by another system called as VAT. Now, let me know one question. Think of it and please tell me one answer to one question. What do you think? VAT is an origin-based tax or a destination-based tax? Think carefully. Right? VAT is a destination-based tax or origin-based taxation. Right? Destination or origin? Destination means the state where the goods are consumed, the state will get that. Simple idea. Understand the point here. The states where the goods are consumed, that state will get the tax. And origin means the state where the good is manufactured, that state will get the tax. At least on this idea, it should be very clear to you. Arey Baba, VAT is a destination based tax. VAT is a destination based tax. Right, sir? How it is destination based tax? Do you remember the concept of earlier, right? Earlier, do you remember this concept where the good was produced in this state and the good was consumed in the second state? Look at this. Please look at this example. Don't say, sir, we have not come across this example earlier. From where did you get this example? Yesterday, did we not discuss this? Before starting GST, did we not discuss this? Now tell me, right, VAT is given to which state here? VAT is taken, collected by which state? Can I simply say the state where the good is consumed? Where the good is consumed, that state will collect the VAT, right? So the state where the consumption happens, that state will collect the VAT. That is the precise reason I said VAT is a destination based tax. Consumption, where the good is consumed, that state will collect the VAT system. Okay. Now, after that, we started with GST, goods and services tax. Correct? We started with GST. Why did we introduce GST? Because there was a cascading effect earlier. There is a problem with transportation between one state to another state. There was a problem regarding ease of doing business because multiple indirect taxes at the central level, state level, etc. Right? And in order to address all of these issues, we implemented the concept of right. We introduced the concept of the GST. And after this, what are the features of GST? I said GST, right? Basically, to implement GST, we have taken the taxes from, that is indirect taxes, by the way. We have taken the indirect taxes from the central level, from the state level, and we have created a new system, goods and services tax. Around 40 types of indirect taxes at center, state plus assessors have been subsumed under GST. To implement GST, we made an amendment to the Constitution of India, 101st Constitutional Amendment. And apart from this, we also set up a constitutional authority, Article 279A, GST Council. After that, there is a dual GST structure in India. What is dual GST? Right, GST rate will have two components, a central GST and a state GST. Central GST and the state GST, right? That is, you take any of the rates. I repeat, you take any of the rate of GST, you can divide them into two equal parts like this, half and half, two equal parts. First half will go to the central government, CGST, right? Second half will go to the state government where the good is consumed. Where the good is consumed, that is SGST. Done. After that, I said there is also IGST. What is IGST? Integrated GST. When the product will move from one state to another state. That is, right, the GST which is levied on interstate trade and commerce. The product is manufactured in one state, will move across the border to another state. That tax rate that is imposed on that is called as IGST, integrated GST. And again, integrated GST can be divided into two equal parts, CGST and SGST. And the SGST will go to the state where the good has been consumed. There are certain goods which are exempted. We have not covered them under GST. There are certain goods which have been brought under GST, but the council is yet to announce a GST rate on it. And finally, we were discussing regarding compensation. What is a compensation? I said the states were concerned about the tax revenues after they give away the taxation power under GST component. That is, whenever you have a right to impose the indirect taxes, you can decide the indirect taxes as per your convenience. This year, you want to collect more tax revenue, you can increase the tax rate. Next year, you want to collect lesser revenue, you can decrease the tax rate. But under GST, the states alone cannot decide anything regarding rate of GST. Why? The rate of GST now shall be decided by the GST Council. And in the GST Council, only one state doesn't have power. You need at least 75% of the votes. Remember this, majority decision making. You need at least 75% of the votes to take a decision in the GST Council. So the states are concerned, if I give away the power and if I want to earn more taxes, right, I alone cannot do anything in the GST Council. So I'm worried about my tax revenue collection. And in order to address this, central government announced that for 5 years, starting point of GST, from the implementation of the GST for 5 years, I will give you 100% of compensation. 100% compensation shall be provided. And yesterday, if you have revised, I've told you how compensation is calculated by the center. From 1 year to next year, they'll simply assume the expected revenue will increase by 14%. That number is fixed. I repeat, from 1 year to next year, right, they will assume that your taxes collected under GST will increase by 14%. That will give you expected revenue collection. But if your actual revenue collection under GST is less than expected revenue, then the gap between that will be given to you in the form of compensation. This is where we stopped actually yesterday. Now let me continue from that point. Now, if the central government wants to provide for compensation, central government should have money in the first place. All of you agree? Those are still feeling sleepy, please wake up now. Okay, please wake up. Class will start. If the central government wants to provide compensation to the states, center should have money in the first place. From where will the central government get the money? That is the reason government introduced a cess by the name of compensation cess. Very simple. That's the reason government introduced a cess by the name of compensation cess. Now, where the compensation cess was applicable? Under GST rate, highest rate of GST is how much? 28%. Now, within this 28%, there were certain goods which were identified. For example, the aerated beverages in the market, or luxury cars in the market, or tobacco products, pan products in the market. So certain products within 28% were identified. In addition, I repeat, in addition to 28%, now these products will also be imposed with the compensation cess. This amount would be collected and this amount would be used to provide compensation to the states. Any problem here? Any problem? Please do let me know. Logic is very simple. Government wants money to pay cess to the states. From where will the government get the money? Government said, within 28% slab, that is 28% rate, I will identify certain goods. In addition to 28%, I will also impose a cess, collect a cess, use this money to pay compensation to the states. Point number two. Right? Point number two. Now, compensation period is over. Yesterday, that was the last point with you people. Right? Remember this. Now, compensation period is over. That is, for 5 years, the compensation was supposed to be provided. We implemented GST from 1st July 2017. We implemented GST from 1st July 2017. Now calculate that CSAT calculation. 5 years from July 2017 will be June 2022. Any problem here? June 2022. So after June 2022, we have completed 5 years of GST. Now, if 5 years of GST are over, center is not paying compensation to the states. What about compensation cess? Is the compensation cess, has it been withdrawn or is it still being implemented by the central government? The answer is, even after 5 years of the introduction of GST, even today, the compensation cess is used by the government. It is there. Please remember, compensation cess, it is still there. It is still being collected by the government. Now, some of you will be confused. Some of you will say, sir, how is that possible? Without objective, right? Because remember, cess means what? There has to be certain objective. Do you remember the basic idea for cess? Cess is imposed, collected to achieve certain objective. So already the objective is over. 5-year duration is over. Even then, why do we have the cess? There is a reason for it. Now, please tell me during pandemic, what happened to GDP? Simple question to all of you. During pandemic, what happened to GDP? Let's say 2021. GDP went down. GDP contracted in India. Now, if GDP decreases, what will happen to GST collection? Right? Connect the dots. If GDP went down, what will happen to GST collection? Logically speaking, GST should also go down. And if GST will go down, please tell me what will happen to revenue shortfall? Revenue shortfall for the states. Revenue shortfall. Please understand revenue shortfall. What do you mean by revenue shortfall? Difference between expected revenue and actual revenue collection. If GST will go down, what will happen to revenue shortfall? Revenue shortage. Revenue shortfall, don't you think it will start increasing? Any problem in understanding the connection here? If GST will go down, automatically the amount collected by the states will also go down. And the difference between the expected revenue and the actual revenue, the difference will start increasing. As a result of this, revenue shortfall, revenue loss for the states will start increasing. Now, at this point of time, what if I say you collected 100 rupee compensation cess? Simple numbers, right? Imagine you're the central government, you collected 100 rupee compensation cess, but the revenue shortfall is 150 rupees. Understand the logic here? You collected 100 rupee, but the shortfall that you're supposed to pay to the states is 150 rupees. Don't you think the shortfall is greater than cess collected? How will you pay 150 rupees using 100 rupee? Not possible. It's not at all possible. Now what you will do? You will borrow from the market. Simple. Only for payment of the compensation, you will borrow from the market. And because you have borrowed from the market, who will repay it? You will have to repay. Now to repay this, from where will you get the money from? To repay this payment of compensation, from where will you get the money from? Government says, we will continue to implement compensation cess till we repay this borrowing that we have done because there was a shortage during pandemic. I hope you understand why we have continued cess now. Any problem here? Right? I hope you have understood why we have continued cess even though 5-year duration is over. Right? So these are certain important points regarding the compensation cess. Please be very, very careful. Now, yesterday many of the students were asking certain important questions. Let me address all those questions. Question number 1, some of the students asked, sir, one of the objectives, central theme of GST was one nation, one indirect tax. One nation, one indirect tax. But what we have done under GST is we have multiple rates of GST. We have 0%, we have 5, 12, 18, 28. In some of the cases, it is 1%. In some of the cases, it is 6%. In some cases, it is 3%. Why? Why did we implement such a complicated structure? All of you will agree with me when I say even with 0, 5, 12, 18, 28, right, 1, 3, 6%, etc. This is a complicated GST structure. Right? Anybody has a problem with that particular point? It's a complicated GST structure. Now, question is why? Why did we go for this kind of a structure? Why not have simply only 5%, only one rate of GST? Why not simply have only 8% GST? Why not simply have only 12% GST? Why this kind of a structure? There is a valid reason. Please understand there is a valid reason. Let me give you what are the reasons why we adopted this model. And after that, if this model is there, what is the problem with that? What is the concern related to that? Let's start with the reasons. Why did we adopt it? Point number 1. Please tell me if there is only one rate of GST, let's say 12% rate of GST. If there is only one rate of GST, that is 12% rate of GST, and this is applicable on, let's say, Hawaii chappals. It is applicable on Hawaii chappal, and this is also applicable on Audi car. Tell me now, is it fair to the poor people? Let me know. Right? You have only one rate of GST, 12%. 12% is applicable on Audi car, Rolls-Royce car. 12% is applicable on a common man consumption good, such as, let's say, food grains, such as Hawaii chappals, clothing, etc. Right? Is it fair? Is it a fair type of a tax? Answer is no. So should you have a same rate of GST on these kind of products? No. There are different groups, so different goods are consumed, different services are consumed, and that is the precise reason we say for some of the goods, let's have a higher rate of GST. For some of the goods, let's have a lower rate of GST. First reason. Second reason, if I have only one rate of GST, let's say 5%. For all the goods and services under GST, let's have only one rate 5%. Please tell me, if you have only 5%, one rate of GST, what will happen to the taxes collected by the government? Don't you think the taxes collected by the government will start falling down? It will start falling down, right? Now that becomes a concern for the government. Now, some of you will say, in that case, sir, do not have only 5%, right? Lower 5%. Have it at a higher level, let's say 15%. All the goods and services under GST have it uniformly at 15%. Now, please tell me, if you keep the GST rate only one rate at 15%, no doubt taxes will start increasing. What about inflation? Think of it. What about inflation? Don't you think the inflation will also start taking place? What about the goods which are consumed by common man? Will they not become costly? Will they not become unaffordable for the common man? So that is also a concern. So argument is very simple here. There are too many groups consuming too many goods. Different goods are consumed by different groups. You cannot have a single rate of GST. Government needs to maintain revenue neutrality. What do you mean by revenue neutrality? You are shifting from one taxation structure to another taxation structure. Your revenues should not fall down. Your revenues should not go down. Your revenues should be at least the equal amount as you collected earlier. Revenue neutrality. Third, it may lead to inflation. It might lead to inflation. And the fourth one, if you have the same rate of GST applicable to poor people, to the rich people, same rate, then you are basically imposing a higher tax burden on the poor people. It might become regressive in nature. More regressive in nature, it can happen. Okay. So these are some of the reasons why Government of India decided to have a not to have a single rate of GST, to have multiple rates of GST. Right. Next, if you have multiple rates of GST, what are the concerns then? What are the problems with that? What is a disadvantage related to that? Let me start with the first one. Administration becomes very, very difficult. Administration becomes very, very difficult. How? Imagine you are purchasing three raw materials, A, B, and C. And all the three raw materials are having different GST rates. Now you are selling one product D, which is also having a different GST rate. Now please tell me, keeping a track of all the raw materials, how much GST you are paying, government to find out how much GST you are paying on each of them, how much you are consuming. Don't you think that's a very, very complicated exercise? Don't you think that's a very, very difficult exercise to conduct? Because all the products are falling under different GST rates. Right? Let me give a very simple example. Simple example to make you understand. Do not write it in the exam. Now, when we introduce GST, all of you heard of a delicacy, sweet by the name of Barfi? Let me know. Right? Bareli ki Barfi. There's a movie even in the name of Bareli ki Barfi. Sweet, right? A dessert. Right? Barfi. Now, if you have eaten Barfi, I'm pretty sure all of you have eaten Barfi, by the way. Right? Barfi, you will get in different varieties. One kind of Barfi, you will get it, right, with a chocolate layer at the top. Another Barfi, plain, right? Kaju ki Barfi, plain, nothing else is there. Another Barfi, right, there will be a silver foil, silver coating at the top. One more type of Barfi, there is a dry fruit sitting on this Barfi. Now, when we introduce GST, Government of India, that is GST Council, by the way, decided all these Barfis are different products. All these Barfis are different products. Right? So, one Barfi will be taxed at 12%, another Barfi will be taxed at 18%, another burfi at a different GST rate, etc. So imagine the kind of difficulty, kind of complexity that will create because of different GST rates. If you have only one rate of GST, all of these will not be created. So that is one concern. Now there is a term that I've written here. Please understand. There is a term I've written, inverted duty structure. Inverted duty structure. Now what do you mean by inverted duty structure? Please understand this very carefully. Understand this very carefully. Example 1, you are a manufacturer. Let's say you are A. You will purchase certain raw material. You will pay GST of 10 rupee. You will pay GST of 10 rupee. Now you will manufacture the product, sell it in the market to customer. You will collect GST. You will collect GST of, let's say, 15 rupees and give it to government. And after this, you will get input tax credit of 10 rupee. Any problem with this? Let me know. Very simple. We have discussed all of this yesterday also. You're a manufacturer A. You will purchase, let's say, a raw material. You will pay GST of 10 rupee to the government. Now you will sell the product to the customer. You will collect 15 rupees, give it to government. Government will provide you the ITC of 10 rupee. Right? This is basically how GST will function. And please make observation here. Please make one observation. Can I say, whatever taxes you pay in the first step, step 1, whatever taxes you pay in the step 1, it is smaller than the taxes you collect and give it to government in the second step. I'll repeat the statement. Please make an observation. Whatever taxes you pay to the government, you will get it back. Don't worry. Whatever taxes you pay to the government in the step 1, it is smaller compared to the taxes that you collect from the customer and give it to government. Right? Just to make an observation. Now, this is example 1. And this is how normally GST rate is applicable. Normally how GST works. But there is a problem called as inverted duty structure. There is something called as inverted duty structure. Now, what is the problem in inverted duty structure? Let me explain this. In inverted duty structure, right, let me give you the example here. Imagine you will purchase a raw material, step 1. You will manufacture, sell it to customer, that is a step 2. Now, in inverted duty structure, understand this carefully, whatever taxes you collect from the customer and give it to government will be lesser than whatever taxes you pay to the government in the form of GST in the first step. I repeat, right? Whatever taxes you collect from the customer and give it to government, it is lesser compared to whatever taxes you pay to the government when you purchase inputs to manufacture the product. Now, I hope you understand there is a difference between example 1 and example 2. Anybody who says, I'll tell you why it will happen, have patience. At least I hope you know that there is a difference between example 1 and example 2. Don't say both are one and the same. In example 1, the taxes you pay on the input is lesser than the taxes you collect from the customer on selling the output. In example 2, taxes you pay on the input is more than compared to whatever taxes you collect from the customer. Now, what is the issue? Why does it happen? Let me explain. Imagine you purchase plastic. Understand why it will happen. Imagine, right, you will purchase plastic. Now, can I say plastic can be used in manufacturing of a car? Plastic can also be used in manufacturing of a bottle. Any problem? Imagine you purchase plastic. The plastic can be used in the manufacturing of the bottle, and it can also be used in the manufacturing of a car. Anybody has a problem with this? Right? Anybody has a problem? It's a very simple example. Now have a look at the next point. In case of car, GST rate applicable could be 28%. In case of a bottle, because government will say bottle is consumed by the common man, I will impose a GST rate of 5%. And in case of plastic, they will impose a GST rate of 12%. Simple. In case of plastic, they'll impose a GST rate of 12%. In car, they will impose 28%. In case of bottle, they will impose 5%. Now, please tell me, if I take this combination, plastic plus car, if I take this combination, plastic plus car, can I say it is example 1? Again, don't literally calculate everything. Tell me, does it make sense or not? If I take the plastic plus car as a combination, is it not example 1? And if I take plastic plus bottle, is it not example 2? Right? This is right causing inverted duty structure. Now, what is the problem with inverted duty structure? What is the issue? Now, follow this very carefully. In first step, you will get input tax credit of 10 rupee. In the second step, you will get input tax credit of 20 rupee. You will get input tax credit. I'm not saying government will not give it. I'm saying government will give ITC in both the cases. But what if I say government will take 30 days to provide input tax credit? Let's say government will take 30 days to provide that input tax credit to you. Now, simple question. You pay tax today to the government. Government will give that after 30 days to you. Would you want 10 rupee to be with the government for 30 days? Or would you want 20 rupees to be there with the government for 30 days? You tell me. As a manufacturer, would you want 10 rupees to be there with the government for 30 days? Of course, you will get it after 30 days. Or would you like 20 rupees to be there with the government for 30 days? Arey Baba, think logically. Some of you are not thinking logically. Right? You want the government to keep your money for 30 days and give it back. Would you want the government to keep 10 rupee or 20 rupee? Arey Baba, don't you think 10 rupee? Right? You should choose 20. Sorry, you should not choose 20 rupees. You should choose 10 rupee. Why? My dear, you are a manufacturer. Sometimes students do not even think. You are a manufacturer. You will require money. Understand this. You will require money. Now, right, out of 100 rupee, imagine government will keep 10 rupee and give it back to you after 30 days. And second example is, out of this 100 rupee, government will keep 20 rupees and give it back to you after 30 days. You prefer government should keep 20 rupees. How? Right? How? You please tell me. You prefer government to keep 20 rupees. If government will keep 20 rupees, don't you think you will face a shortage of working capital? Let me know. Compared to example 1, in example 2, don't you think you will face a more shortage of working capital? Working capital simply means, right, I'll write it on this side. Working capital simply means the money that will be used for taking care of day-to-day expenditure. Remember this. Money that will be used by the companies to take care of day-to-day expenditure. So if the government will keep 10 rupee compared to 20 rupee, lesser amount is there with the government. For you, don't you think that is good? In the second example, government will keep 20 rupees, which means you will face, right, shortage of working capital. That is the reason. Now, at least tell me, at least look at this and tell me, can I say inverted duty structure is a problem? Let me know. Right? Can I simply say inverted duty structure is a problem? And this will happen because there are multiple rates of GST. This will happen because there are multiple rates of GST. What if there is only one rate of GST? 18%, 18%, 18%. That will not lead to inverted duty structure. Right? So this is one of the problems in case of India regarding GST. Please remember this. Please remember. Very often this is cited in the newspaper. This is a problem. Government is addressing it. And this is not easy to address. Many of you will simply say, right, sir, let's address it then. It's not that easy to address because I told you the product that is considered here is a plastic. Plastic is not simply used in one product. I hope you understand. Plastic is not used only one product. Plastic will be used in multiple products. These products can be falling in 28%, 18%, 12%, and 5%. Now, your argument is, let's say plastic is 12% now. Your argument is, let's reduce it to 5%. Understand this, right? If whatever products are used, whatever products are manufactured using plastic, they'll be either imposed with 5, 12, 18, and 28%. Right? You will simply say, let's reduce the GST rate to 5%. If you reduce it to 5% and all the products are covered under 5, 12, 18, and 28, there will not be any inverted duty structure. There will not be any inverted duty structure. But tell me what will happen to tax revenue collected by the government. And don't you think suddenly the tax revenue collected by the government from plastic will automatically start falling down? Right? So there's a complication. It's not that easy. It's a very, very complicated process. That's the reason it is taking so much of time to basically eliminate all of these inverted duty structure problems. Okay. So that is one concern regarding GST. Second, it goes against a central idea of GST, that is one nation, one indirect tax. The central idea of a GST, central theme of GST is what? One nation, one indirect tax, but we are not able to achieve that even today because there are multiple rates of GST. Now, some of you will ask, sir, then what is the way forward? What is the way forward? There is a very important recommendation that has been provided. There is one institution by the name of NIPFP. There is one institution by the name of NIPFP. NIPFP functions under Ministry of Finance. What is the long form of NIPFP? I'll say this, please listen. National Institute for Public Finance and Policy. I'll repeat it again. Right? National Institute National Institute of Public Finance and Policy, NIPFP. Okay, that is the expansion. Before I basically address what was the recommendation, there are two students who are saying there is no provision of 30 days in the GST. We can claim after 10 to 15 days. My dear, when I explain this to you, I said, let's assume government will take 30 days. Some of you are saying, right, I know some of you are basically involved in trading, right? You have a business, so you will argue with me. You'll simply say, no, 30 days. 10 days. In 10 days, I can claim. Let's take it 10 days only. Let's take your number only, 10 days. Even after this, let me ask you the same question. Instead of 30 days, your argument is you can claim ITC in 10 days. Even then, what would you prefer? Government keep 10 rupees or 20 rupees and give it back to you? Question remains same. Answer should also remain same. Whether this is for 30 days, whether this is for 10 days, whether it is even for 2 days, doesn't matter, my dear. What amount of money would you want the government to give you in the form of ITC after 5 days, after 10 days, after 15 days? Lesser amount of money. Lesser in these two examples. Compared to in these two examples. Right? Lesser amount of money. Doesn't matter. It will not make any difference. Because please understand, any other system wherein you will not quickly get ITC, it simply means you have a shortage of working capital. Simple idea. It will have an impact on shortage of working capital. Okay. Now, what is this NIPFP? National Institute for Public Finance and Policy. NIPFP. Now, what is the recommendation here? There was one recommendation given earlier and most of you will immediately say, yes, it makes sense. What is the recommendation? There are two slabs, 12% and 18%. There are two slabs, two rates, 12 and 18. The recommendation was, why don't we merge 12 and 18 and make it 15%? Why don't we make it, right, 15%? And many of you looking at this number will say, yes, it makes perfect sense. 12 by 18, I will add 12 and 18, divide it by 2, I will get middle point 15%. But there is one big problem, very, very big problem. What is a big problem here? Imagine there are 100 crore worth of goods and services on which you will impose 12% GST, and there are 500 crore worth of goods and services on which you will impose 18% of GST. Let's start calculating. 100 crore value, 12% GST. How much will be the GST collected? Right, under 12%, 12 crore. 18% of 500 crore, how much will be the GST collected? 90 crore rupee. So basically, as per the current structure, how much money you will be collecting in the form of GST here? 102 crore rupees. Now, you have merged both the 12 and 18 into 15%. Now, total value of goods and services will be 600 crore. So, 15% of 600 crore will be how much? 15% of 600 crore will be 90 crore rupee. Earlier, you collected 102 crore. Now you are collecting 90 crore rupee. Will it not lead to loss of revenues for the states? Will it not lead to loss of revenues for the central government? So that was the concern. And I'm taking very simple numbers to make you understand. I'm taking simple numbers to make you understand. In fact, as per various estimates, the annual revenue loss because of this will be more than 1 lakh crore rupees. The annual losses because of this, losses in the sense lower GST collection, will be more than 1 lakh crore rupee. That's not a small number. That's a huge number. That is a precise reason this is not yet implemented. This has not been implemented. Then what is the way forward? There is a recommendation given by NIPFP, National Institute for Public Finance and Policy. It says, first recommendation is, let's implement it. Let's make it 12 and 18% plus, that is merge it together, have 15% GST rate. Now many of you will say, but sir, revenue losses. In order to adjust for revenue losses, please look at the second recommendation. NIPFP says, right, there are goods and services on which we are imposing 5% GST rate, increase it to 8%. Increase it to 8%. And there are goods and services on which we are implementing 28% GST rate, increase it to 30%. Increase it to 30%. Right? This rise in GST rate, we will use this to basically adjust for revenue losses in the step 1. This is a recommendation which has been given by NIPFP. Why the government is not implementing it? Because simple reason. If the GST rates are increased from 12 to 15%, please tell me, will some of the goods not become costly? Will some of the goods, will they not become unaffordable for the poor people? Same thing can be said regarding 5 to 8% as well. If you increase it from 5 to 8%, some of the goods will become costly for the poor people. This may lead to inflationary trend in the market. That is the precise reason this has not been implemented. This is yet to be implemented, but please understand, there is a recommendation. If at all UPSC will ask you, you can provide these kind of recommendations. Okay. Now, this is regarding why do we have multiple rates of GST. Now, many students ask me, sir, why alcohol for human consumption, it is not yet there in the GST. Reason is simple. Alcohol, right? Those who are saying the PPT is getting stuck up, please refresh. I don't have to keep on telling you people this every day. If your screen gets stuck up, please hit refresh. If there is no audio, please hit the button fix audio, or else please hit refresh. It will hardly take 5 seconds, but automatically it will refresh and it will be correct then. Now, why alcohol is not there under GST for human consumption? Reason is very simple. The states are able to collect a huge amount of tax revenue by imposing taxes on a product such as alcohol. Now, the states are not okay with giving away these taxation power under the GST. That's it. The states are not okay with it. That is a precise reason even today alcohol is not under GST. There is no GST on alcohol even today. What about petrol and diesel? What about fuels? What about petrol and diesel? Why petrol and diesel are not, they do not have a GST rate as of now? Why they do not have GST rate as of now? Reason is very simple. We have discussed this earlier, right? And how many of you are able to read the Hindu article yesterday? Let me see. How many of you, right? I've asked you to read that. In fact, how many of you were able to read Hindu newspaper article yesterday regarding petrol and diesel prices? Right? I asked you to read. And what was the gist that you could take away from the article? What was the inference? Inference is simple. Again, don't worry about political argument here. Don't worry about political argument. You are reading economics, apply economics. Right? The argument is simple. In the international market, prices for the crude has gone down, but the market prices have not gone down. And as a result of this, the customers are not getting the benefit of the decline in international crude prices. Now, please understand, did we not discuss the same concept earlier? Let me know, did we not discuss the same concept earlier as to how petrol and diesel prices are decided in India? Right? And I said, whenever the international crude prices will fall down, the state governments, the central government will start increasing the taxes, as a result of which market prices will not fall down in India. Now, please understand, there is one factual information that you need to remember. If you take the central government and state government taxes, I repeat, if you take central government and state government taxes, right, it is, understand this, if you are paying 100 rupee per liter, if you're paying 100 rupee per liter for petrol or diesel, don't worry, which fuel, don't worry. If you're paying 100 rupees per liter, more than 50% of this, price is because of the taxes imposed by the center and the state. Any difficult to understand this statement? Right, first statement, understand this. If you pay 100 rupees per liter for petrol or diesel, more than 50% of this price is because of the taxes imposed by the center and the state. That is more than 50 rupee out of 100 rupee. It is in the form of central government tax plus state government taxes. Now, can I also make an inference here? Think of it. CSAT concept, think of it. If more than 50% of the market price is because of taxes, can I say tax rates is more than 100% on petrol and diesel? Think of it and answer. Please think of it. I'll repeat the concept again. If you pay 100 rupee in the form of market price per liter of petrol, more than 50% of it is in the form of central government taxes plus state government taxes. That is, if the market price is 50 rupee, another 50 rupee you will pay in the form of taxes. That is what I'm trying to tell you. And based on this, can I say the tax rate is more than 100% on petrol and diesel? Now, please tell me, what is the maximum rate of GST under GST as of now? Under the GST, what is the maximum rate? 28%. So now have a look at this. Please have a look at it. If you bring petrol and diesel and impose a GST on it, what is the maximum rate of GST on petrol and diesel? 28%. And in the future, you want to change the rate of GST, you will require GST Council approval. Today, do you require GST Council approval to basically change taxes on petrol and diesel? Think of it. Today, do you require GST Council approval to change the rates of taxes on petrol and diesel for both center as well as state? Absolutely no. You do not require GST Council approval. Don't you think if that is done, that is, if it is brought under GST, then suddenly central government might find it very difficult to generate more revenues from fuel taxes. State governments might find it very, very difficult to find higher revenues from fuels. That is the precise reason, my dear. Please remember, that is the precise reason why even today we do not have GST rate on petrol and diesel. Any problem here? Any problem? That is the reason even today we do not have petrol and diesel GST rate on petrol and diesel. Central government has its own taxes on petrol and diesel. State government also has its own taxes on petrol and diesel. Sir, what about aviation turbine fuel? Same. Even in case of aviation turbine fuel, there is no GST. Both center and state have a different tax rates. How tax rate is 100%? My dear, if you are imposing a tax of 50 rupee on a price of 50 rupee, what is the tax rate? Simple. You tell me, right? Those who are asking these questions, there are 3 or 4 students. Your CSAT is very weak, my dear. Very, very weak. If your tax is 50 rupee on a price of 50 rupee, how much should be the tax rate? How much should be the tax rate? 100% is the tax rate. It's a very simple calculation. Ore baba. So tax rate is 50%. Great. Right? Those who are asking, right, or those who are saying tax rate is 50%. Right? Okay. Focus on a CSAT paper as well. Focus on CSAT paper. If your price is 50 rupees, if the tax rate is 100%, how much will be the tax? Arey Baba, it's a very simple calculation. Don't make a mistake here also. If the value of the product is 100, if I impose a 10% tax, what is the calculation? 10% of 100 plus a 10 rupee. Apply the same logic here. 50 rupee is the price, 100% tax, then right 50 rupee. Then basically, right, it is not 60, it is 100. Right? So understand this. The market price will become 100. And those who are having these kind of doubts, please be very careful. People will take advantage of you. Right? For example, if I find out you are this kind of a person, hypothetically, again, don't take it seriously. Then, right, I'll take a loan from you and say, I will give you 100% tax rate. Then after 1 year is over, I'll give you 10 rupees. I'll take a loan of 50 with 100% the interest rate, but I'll give you 10 rupees and you'll be happy with that. Okay, so basically this is a logic. Now I hope you understand why states are not happy to give away alcohol under GST. Why central and state governments are fighting, right, whether to have GST rate on these fuel products or not. Okay, that is a basic argument here. Now let me go forward. Let me make a comparison of what was the taxation system earlier and what is the taxation system now. Earlier, goods and services were taxed separately. That's a straightforward point. Excise duty was there on goods, service tax was there on services. State government, right, had different indirect taxes. But now there is no distinction, there is no difference between goods and services. All the goods and services will be brought under only one tax, that is goods and services tax. Second, earlier different states had different indirect tax rate. For example, if this product was sold in the market in the earlier taxation structure, state 1 would impose 15% sales tax, VAT. State 2 would impose 18% VAT. State 3 would impose 12% VAT. State 4 would impose 13% VAT. So from one state to another state, the rates of taxation were different. Don't you think that's a complicated process? Now under GST, across India, this bottle will be sold at the same rate of GST. Across India, the bottle will be sold at the same rate of GST. But please understand the next point here. Please understand the next point. The rate of GST remains the same. Let me ask you a simple question. Should the market price, according to you, should the market price remain same? Think logically, by the way. Think logically. The rate of GST remains the same. Should the market price remain same? Answer is no. Right? Answer, market price should not remain same. Why? What about cost of transportation? What about transportation cost? So market price will not remain same. For some states, product could be one rupee higher compared to other states because of transportation cost. But the rate will remain same. And when the rates remain same, that is the tax rate remains the same, we simply say, right, national market. Across India, tax rate is only one rate, 18%, 18%, 18%. We call this as a national market. So earlier, because the rates were different, national market was not possible. Now, national market is possible under GST. Earlier, there was a tax on production, central sales tax, origin-based taxation. Now, it is a tax on consumption, that is a destination-based taxation. There was a cascading effect which was taking place earlier. Now, there is no cascading effect. This is how GST is different compared to earlier taxation systems. Now, let me give you calculations. Let me show two calculations here. Point number one, you simply need to make observations, make inferences from the calculation. Do not by heart calculation. Please do not waste your time. Do not by heart calculation. It is of no use to you. Make inferences. What do you mean by inferences? How GST is better compared to earlier system? Is there cascading effect? No cascading effect. How CGST, SGST will be distributed? How GST will function? Focus now. Please focus. The pre-GST era, before GST, how it used to happen. And this is intrastate. Intrastate means what? Within the same state. Intrastate means within the same state. Now, let's say A will manufacture the product, sell it to B. A will manufacture the product, sell it to B. Right? Or A will provide certain services to B. Either ways. Now, let's say, right, a service tax is applicable on this. A will provide certain services to B. A service tax is applicable on it. And a service tax of how much? 10%. So, if the product cost is 1000, service tax of 10%, what will be the tax rate? 100 rupee. So, B will purchase the product or a service at 1100 rupees. Now, B will sell this to customer. B will sell it to customer. B wants to earn a profit of 1000 rupee. So, the cost price B will take is 1100. Now, please understand why they will take 1100. 1000 rupees the cost of the good plus 100 rupees service tax. Question number one, who will collect this service tax? Let me know, who will collect this service tax? Who will take this service tax? Is it the state government or the central government? Please understand my point here. Who will collect the service tax? If I am not told, please remember, service tax is imposed and collected by the central government. If I have not told this, please remember this. The service tax was imposed and collected by the central government. What about the sales tax? What about sales tax or the VAT, value added tax? Who will impose and collect VAT? It is the state government. Now please have a look at it. One tax is collected by the center, another tax is collected by the state. Now simple question to you people. If you are B here, if you are the seller B, you have paid 100 rupees service tax to the central government. Now in the next step, you will pay taxes to the state government. Do you think state government will give you input tax credit? Let me know. Do you think, and tell me, does it make sense to you also? Do you think a state government will give you input tax credit? Absolutely no. Are some of you are saying yes? How? Yesterday did we not discuss this? One government is collecting tax and your second step, you are paying tax to some other government. Why do you think the second government will give you input tax credit, my dear? Why do you think the state government will give you input tax credit? Have they collected the tax from you? Let me know, have they collected the tax from you? No, state government has not collected. So they will not give you that input tax credit. So if you don't get input tax credit of a service tax, what will you do? You'll basically transfer that as a burden to the customer. That is the reason you will take the cost price as 1100. Now you want to earn a profit of 1000. Selling price will become 2100. State government will impose a VAT of 10%. 210 rupee will be the VAT and the market price will become 2310 rupees. Now please tell me, in the first example, pre-GST, is there cascading effect? Let me know. In the first example, that is a pre-GST, is there cascading effect? Is there input to tax credit provided to you? No. Cascading effect is there. Market price will be higher. Total tax burden will be on the customer. Come to the GST. Understand how GST is much better. Come to GST. Now have a look at this. Price is 1000 rupee. It doesn't change. Number will not change. Price is 1000 rupee. GST rate, let's say is 10%. So government will collect 100 rupee from you. And please understand, government is telling you whatever taxes you pay on the input, I will give it back. I will give it back. I will give it back to you. Don't worry. So now, although you have paid 1100 rupees to purchase a product, right, you will not include the GST when you're selling the product to the customer. You will not include it. Why? You know that this 100 rupee will be credited back to you. You will get input tax credit. Hence, you will not include that in the cost price of the product. You want to earn a profit of 1000 rupee. Now the selling price will become 2000 rupees. GST rate is 10%. That is basically 200. Final price is 2200. Now whatever taxes government has collected in the first step, you take this 200, give it to the government. Now government will return this 100 rupee to you. Simple idea, right? This 100 rupee will be returned to you. So first step, you will pay 100 rupee to the government. In the second step, you will collect 200 rupee and give it to the government. Government will process 100 rupee into your account. Sir, how will they give it back? You are supposed to have accounts with the tax authorities. You will have a certain accounts with the tax authorities. They will transfer that credit into your account. That is a basic idea. Now, please tell me in the second example. In the second example, this one, by the way, in the second example, is there a cascading effect? Let me know, right? Is there cascading effect in the second example? No. Some of you are saying yes. Tell me where. Please tell me where in the second example you can see cascading effect. Right? Tell me, tax on a tax, where are you able to find? And point number 2, is there input to tax credit provided by the government? Yes. As a result of which, final burden, that is the tax burden on the customer, would be lower. Market prices would also be lower. Now tell me, can I say GST is a much better system compared to earlier system? Let me know. GST is a much better system compared to earlier system. Now please tell me, after giving input to tax credit, I repeat, after giving input to tax credit, how much is the taxes collected by the government in second example? After providing input tax credit, how much is right the tax collected by the government? Right, government, totally, don't worry. I'll tell you how the division will be done. Can I say step 1, government will collect 100. Step 2, government will collect 200. But this is input to tax credit. So total taxes collected in the second step is 200 rupee. Now divide this into 2 equal parts. Next step, divide this into 2 equal parts. That is 100 rupee will go to the central government, CGST, and another 100 rupee will go to the state government, SGST. Any problem how the division will take place, how the distribution will take place? Can we go forward here? Any problem with this? But sir, people consider GST as very costly. No, my dear, because of GST, goods have not become very costly. Because of supply disruptions in recent times, the goods have become costlier. It's not because of GST. It's because of supply side disruptions. Any problem with this? Any problem? Can we go forward? And if you think of it, understand this concept very carefully. This is a beauty of GST. Beauty. Again, will UPSC ask you this? I don't expect UPSC will ask you this. Look at example 2. Please look at example 2. Right, and tell me how much is the total value addition that is happening to economy. Think of it. We have discussed value addition, by the way. Look at example 2 and please tell me how much is the value addition that is taking place in the second example. Second example. Can I say value addition is 2000 rupees? Some of you are saying 1000 rupees. No, my dear, 2000 rupees. Value addition that is taking place is 2000 rupee. Any difficulty here? Arey Baba, any difficulty? Step 1, right? When A will sell to B, how much is the value addition? 1000 rupee. Anybody has a problem with this? Let me know. Step 1, A will sell to B. How much is the value addition? 1000 rupee. Step 2, how much is the value addition? In the second step, how much is the value addition? Right, 1000 rupee. Total value addition done to the economy is how much? 2000 rupee. What is the tax rate? 10%. Now please have a look at how much is the GST collected totally. That is after ITC. After ITC, please look at how much is the GST collected. GST collected is 200. 10% of value addition is 200. Which means whatever is the value addition that is happening to the economy, only on the value addition we are imposing GST. So can there be cascading effect? No, there will not be any cascading effect here. Any problem here? If you have not understood this, don't worry. Don't worry. Right? This concept UPSC will not ask you this. Right? But argument is simple. On value addition, we are imposing tax and collecting. So there should not be any cascading effect. Any problem here? Can I go forward? Why to impose GST in milk? Arey Baba, there is no question of why to impose. GST Council will decide what should be considered, what should not be considered. But sir, center both the examples is getting 100. It is the state which is at a loss. How? Right? Why do you say the state is losing? And where is the loss for the state? Please do let me know. Okay. So this is basically the argument. This is basically how GST is applicable in interstate. Let me go to intrastate. Right? Let me go to intrastate. What is this? Intrastate? Intrastate means one state to another state. Simple. Right? Interstate means one state to another state. Different states. Production will happen somewhere else. Consumption will happen in another state. Simple idea. Now let's say A will sell the product to B. Right? A is there in the first state. B is there in the second state. And now company B will sell it to customer. How it will work out? Please understand. Now A will sell it to B. Interstate. CST is applicable. Right, I'll start with example 3 now. A will sell it to B. Right, B is in a different state. A is in a different state. CST is applicable or not? Please do let me know. CST, Central Sales Tax. Right, 10%. So B will purchase it at 1100 rupees. Now the cost price will be 1100. I hope you remember yesterday's example. The company B, when they are paying VAT to the state government, second state government, they will not get any input tax credit. As a result of this, cost price will remain 1100. Profit is 1000 rupee. Selling price will become 2100. Tax, let's say VAT at 10% will become 210. Right, final price will be 2310 rupees. Now, under the pre-GST era, input tax credit was not provided. Cascading effect was present. Now, let's start GST. Example 4, GST. Right, step number 1, same. Price is 1000 rupee. Product is moving from state 1 to state 2. Or raw material is moving. Don't worry. IGST, interstate means IGST is applicable, integrated GST. Let's say 10%, 100 rupee will be collected. B will pay 1100. Now please understand the difference in the example 4. Cost price, the seller, that is company B, will take it as 1000 rupee only. Why? Whatever IGST company B has paid will get input tax credit. Company B will get input tax credit. So cost price will be 1000. Profit again is 1000 rupee. Selling price will become 2000, that is 2000 rupee. GST rate of 10%, that will become 200 rupee. Now, right, the final market price of the product will be 2200. Now, how this will work out? Follow this very carefully. In the step 1, government has collected 100 rupee IGST. Step 2, government has collected 200 rupee GST. This IGST will be paid back to the company B. Company B will get IGST of 100 rupee back. Now this 200 rupee, divide this into 2 equal parts. One will be 100 and the other one will be, right, obviously 100 rupee. So 100 CGST will go to central government. Now please tell me 100 rupee SGST will go to which state here? 100 rupee SGST will go to which state? Will it go to the state 1 or will it go to the state 2? All of you will agree? It will go to, state 2. It will simply go to the state 2 where the consumption of the good, has taken place. Please look at it and tell me, don't you think under GST, even when there is an interstate trade and commerce happening, the input tax credit will be provided and there is no cascading effect, tax burden on the customer would be lower. Now, there are two students, I don't want to take the name. They are saying state 1 will get SGST. My dear, SGST is a destination-based tax. A destination-based tax means the state where the consumption means where the good is used by the customer. There is no further sale of it. The good will be used by the customer, right? That is basically the consumption. So where the consumption of the good will happen, that state will get SGST, right? So in this example, it is the customer who is sitting in the second state. Hence, SGST will go to the second state. Even now, is there a problem with SGST? Please do let me know. IGST will go to whom? My dear, IGST is returned back here. IGST is given back. Right? Please listen to the lecture very carefully. IGST is given to the company B. Input tax credit. Right? You are not listening to the lecture very carefully. IGST is given back to the company B. Right? Done? How VAT is applicable? Arey Baba. Imagine you have manufactured this product. You will sell the product to me. I will sell this product to a shopkeeper. Shopkeeper will sell the product to customer. Now, point number 1. Do you understand the difference between production and sale? Let me see. All these are basic ideas. We have discussed all of it. Please tell me, do you understand the difference between production and sale? What is the difference? Production means you will take raw material, you will take intermediary goods, you will convert it. Whereas sale is, I'm not making any changes. I'm simply selling the product. Now, please tell me, you will produce the good. Correct? You will produce the good. And on the production, if you have revised yesterday's class, on the production, right, basically we will impose earlier, not today, earlier, we will impose excise duty. Correct or wrong? Let me know. Right? Yesterday I've written this also in the slide. If you have seen it, you will know this. Right? On production, who used to impose the taxes earlier? Central government, excise. Now, I will purchase it, I will sell it, shopkeeper will purchase it and sell it. Who will impose the taxes on the sales? Who will impose taxes on the sales? On the sales, state government would impose the taxes. And what was the tax earlier? VAT system, value added taxation. So don't you think value added taxation, VAT is imposed at multiple stages in this example that I've given? Just make observation, you will understand it. Okay? Okay, let me go forward. So in first example of intrastate, a state is getting 210, but in the second example, state is getting 100 rupee tax. So what? Yes, right, because there was basically a cascading effect. State would get more taxes, but the tax burden on the customer would be lower. Sorry, a tax burden on the customer would be much, much higher. We are trying to address the burden of taxation on the customer. We are trying to address the issue of cascading effect in the system. That's a basic idea. Okay. So this is how GST will work out in case of interstate as well as intrastate. Do not complicate all of this. Listen to me before I go forward. Do not complicate it. If you have not understood the example, leave it. Don't worry, it's a very simple calculation. Leave it. Right? But what you need to understand is under GST, at every step, ITC is provided. And because ITC is provided, cascading effect will not happen. That is the concept you need to carry to UPSC, not the calculation. UPSC will not ask you, show through calculations. Show through calculations how GST is better compared to earlier taxation system. You can check the papers. 5 years are already over with GST. UPSC has not asked. UPSC will not ask you that. Okay, done. Let me go to the next one. But then it is a loss to manufacturing state. That you people do not think. That is the reason this will happen. There are two students who say product is manufactured in the state 1, product will be consumed in the state 2. Product is manufactured in the state 1 and will be consumed in state 2. Two students are saying because of this, the state 1 is losing. State 1, is basically losing out. Now, please tell me, will only one good be manufactured in the economy? Think. Please think. Will only one good be manufactured in the economy? That is my first question. Which means no, you are producing crores of goods. Question number 2. Will all the goods manufactured in the state 1, will all the goods be consumed in second state? What about intrastate consumption? What about intrastate consumption? You'll have to consider that as well. Let me ask you a third question. In this example, state 1 is producing, state 2 is consuming. Can for a different product, think of it, can for a different product, can it be vice versa? The production is happening in the second state, consumption is happening in the first state. I hope you understand. So please do not come to a conclusion, because just to make you understand, I give you only one example. That is, production will happen in state 1, consumption will happen in the second state. Based only on one example, do not come to a conclusion that state 1 will always lose, state 2 is always winning. Not exactly. Right? In fact, if you look at the data given by the government, economic survey, the states such as Tamil Nadu, Gujarat, Maharashtra, Karnataka, please tell me, these are production states? Any problem? I'll repeat, the states such as Gujarat, Maharashtra, Karnataka, Tamil Nadu, these are industrial states, production states. These are the states which are collecting highest amount of GST. These states are collecting highest amount of GST. Right? The reason behind that is, if the states are production states, automatically don't you think per capita income in these states will be higher? Let me know, does it make perfect sense to you or not? If these are very good industrial states, production states, right, don't you think the GDP from these states would be higher? Per capita income would be higher. Large number of incomes are generated in these states. Consumption will also be higher in the states. Right? That is the logic. That is basically the logic. Okay. Now, let me go to the next one. GST network. Next concept is GST network. Now, what is a GST network? GST network is basically a non-profit organization. GST network is a non-profit organization. Right? Non-profit organizations are registered under Companies Act. These are registered under Companies Act. Now, what do you mean by non-profit organization? These organizations which are registered under the Companies Act, they might generate revenues, they might even earn profit, but the profits are not given to the owners. I'll repeat it. What do you mean by the concept of non-profit organizations? Best example, have you heard of charitable organizations? Let me know. Have you heard of charitable organizations? Charitable organizations, the one who has set up charitable organization is not working for profit. Unlike any other company, right? Any other private sector company, they are working for profit. The profit will go to the owners. But if you have a non-profit organizations, right, NGOs, right, charitable organizations, etc., profits might be generated, revenue might be generated, but these are not given to owners. These are again invested back in the business itself. That is the reason these are called as non-profit organizations. Non-profit organizations. These are established under Section 8 of Companies Act. These are established under the Section 8 of Companies Act of 2013. Now, point number 2. What is the GST network? What is the role of GST network? The role of the GST network is very simple. It will provide a back-end support. It will provide a support services for everybody who is participating in the GST. For example, let me give a very simple example. Please tell me, when you have gone to a shop, have you seen a GST number being displayed by the shopkeeper? Let me know. Right? You purchase something from Amazon. Please open the receipt. Open the bill. In the top, you will see GST registration number in the bill. If you have been to a restaurant, right, and in the back of this, right, that is basically the billing counter. Back of the billing counter, they will display what is their GST registration number, right, in a lengthy number like this. Now, please understand, all of these services, that is in simple terms, GST registrations, right? Which businesses will get registered under GST? What should be their GST registration number, right? How should they file the documents with the government of India, right? Conducting analysis of the taxpayers. All of this function is conducted by GST network. It is basically an authority which has been set up by the government, which will provide, right, the information technology, IT infrastructure services, such as taxpayer profile analysis can be done by GST network. Registration of the taxpayers is done through GST network. Filing of the returns means submission of the documents is also done through the GST network. Now, GST ownership, that is GST network ownership, half of the GST network is owned by Government of India, 50% is owned by Government of India, and remaining 50% is with the state government as well as the union territories who are part of GST Council. Right, so this is basically one more concept, a small concept related to the concept of the GST network. Any difficulty here? First and second point, my dear, it is a non-profit organization, meaning what? Whatever revenue they generate, they will not give it to government, because who is the owner of GST network? Please tell me, look at the last point and please tell me, who is the owner of GST network? Central government and state government. So GST network, whatever revenue they generate, they will not give it back to government. They will again use it to, right, conduct the business only. That is the meaning of a non-profit organization. Right. Second one is, right, I said it will provide infrastructure backbone, infrastructure services to all the taxpayers in India. For example, imagine you are conducting a business. You are owner of a company. You will have to be registered under GST. All of you will understand at least this point. Let me know. You are owner of a company. You will have to register under GST. Which authority will provide you the facility of registration under GST? It is a GST network. Arey Baba, I'm explaining that only. You people don't listen. That's a problem. I'm explaining what is the function, and the two students are asking, explain the function of GST network. Am I not explaining the same thing? Right? You will have to be registered under GST network. Right? Who will provide you that services? Who will help you in getting GST registration number? It is the GST network. Now, Government of India wants to find out how many taxpayers are there under GST. Right? How many people or how many companies are paying how much taxes under GST? Last year, this company paid how much taxes under GST? The analysis of the taxpayer is given by the GST network. Right? So registration, analysis, you want to file receipts with the government. You want to give a document to the government showing how much should be your input to tax credit. Where will you file all of these documents? It is right through GST network. So these are some of the functions. These are some of the functions, right, regarding GST network. 2 months back, ownership 49% was with government, 51% with private entities. Earlier, that was the ownership structure. Now, this is the ownership structure. You can check the GST network website. Now, the ownership structure is this one. 50% with the central government, 50% remaining with the state governments. That is the new ownership structure. Okay, next concept, anti-profiteering measures. Anti-profiteering measures. Now, before going forward, this is my advice to you people. Again, don't take it as a criticism. Take it as an advice. Advice means either you want to take it, otherwise leave it. Generally, I see that there are certain students who keep on typing continuously when I'm discussing. I don't have any problem. I absolutely have no problem. My concern is, if you're typing, will you be able to listen to what I'm saying? Think of it. Please think of it. If you're continuously typing, will you be able to listen to what I'm saying? Then someone will say, sir, then how should I raise my doubt? Generally after a certain point of time, maybe 15 minutes or 20 minutes, I raise one question to all of you. I'll keep on asking. Any doubt, please do let me know now. Right? And if you raise a doubt at that point of time, generally I address it. Okay, so that is how, right? Again, if you want to keep on typing, please do that. I don't have any problem regarding that. Okay, now let me go to the next one. Anti-profiteering measure. Anti-profiteering measure. Now, before I go forward, please tell me, in yesterday's Hindu newspaper, have you come across the term profiteering? Let me see. Let me see how many of you have actually read the newspaper yesterday. Have you come across the term profiteering? And if you ask me, sir, where should I have come across the term profiteering? The same article on petrol and diesel prices. That same article on petrol and diesel prices. If you don't trust me, look at the article again. There is one term, profiteering. Now, what do you mean by profiteering? What do you mean by the term profiteering? Making unfair, excessive profits. Profiteering simply means making excessive, unfairly making lot of revenue. Increasing your revenue through unfair methods. Now, what is this profiteering? Let me explain it to you. Let me give a very simple example. Let me explain it to you. Now, just to make an observation here. Imagine you're a manufacturer of this bottle. Let's start. You're a manufacturer of this bottle, right? You are selling this bottle in the market at 100 rupee, including profit. I repeat, you want to sell this bottle in the market at 100 rupee, including profit. Now, government will have a GST rate of, let's say, 12%. Government will have a GST rate of 12%, which means you will have to sell it in the market at 112 rupees. Any problem with the calculation? You want to sell this bottle, including profit, at 100 rupee. Government says a 12% tax rate. You will have to sell it in the market at 112 rupees. Your MRP should be 112 rupees. Now, what if I say government will reduce the GST rate to 5%? Tell me now. What if government will reduce the GST rate to 5%? What should be your new MRP? Simple calculation. Do not complicate it. What should be your new MRP? Your new MRP should be 105. Anybody has a doubt here? Your new MRP should be 105. And now look at the statement here. If the GST is reduced, as a result of which, if your MRP is also reduced in this way, can I say you have transferred the complete benefit of tax reduction to customers? Let me know. You have transferred the complete benefit of tax reduction to the customers. And please understand, nothing else is changing. Right? Don't ask me what about cost of transportation, what about raw material. Nothing else is changing. Only tax rate is changing. But what if I say, rather than reducing it to 105, you will reduce your MRP to 108 rupees. Rather than reducing it to 105, you will reduce your MRP to 108 rupees. Question number one. Question number one. If nothing else changes except GST rate, please tell me, will your profit earning, how much profit you are earning at 108, will it increase or not? Let me know. The profit earned by you, and again, nothing else changes. Don't say raw material, don't say labor, don't say anything. Nothing else changes. Will your profit earning increase? Of course, yes. Profit earning has increased. You're earning 3 rupee extra now. Point number two. Point number two. Have you transferred the complete benefit of tax reduction to customer? No doubt you have reduced market price. I hope you understand. No doubt you have reduced market price. But have you transferred the complete benefit of tax reduction to the customer? Answer is no. Can I say this is a prime example of profiteering? Let me know. This is nothing but profiteering. You're making unfair excessive profits. You're making unfair excessive profits. You're profiteering. Government is not against you making profits. Because please understand, many of you will say, sir, why should I not earn profit? Government is saying, government is not against you making profit. Because when you have 105 rupees, are you earning profits here? Let me know. When you're selling it at 105, are you earning profit? Yes, you're still earning profit. But government, Arey Baba, some of you are saying no. Why? What is the difficulty in this? I don't understand some of the students. What is the difficulty in this? You are selling it at 100, including profit. Arey Baba, right? Please understand, some of you are very, very weak. Very, very weak in a, right, a CSAT. Right? So have a look at this. You are selling it at 100, including profit. Here also, you will sell it at 100 rupee, including profit, but the tax rate is 5 rupee. So you will still be making profit at 105. But the amount of profit that you earn by selling it at 108 rupees, when the GST rate has been reduced from 12% to 5%, will be much, much higher. Right? You will be earning much, much higher profit. That is the reason I'm saying, right? It is unfair, excessive profits. It is unfair, excessive profits. This is profiteering. So government says earn profit. No problem. Earn profit. But do not profiteer. Do not profiteer in the business. Earn profit. Right? Which means whenever I'm changing the tax rate, transfer the complete benefit. Right? Transfer the complete benefit to the customers. Now, how do we ensure that it will happen? How will the government ensure that this will, right, not happen? Profiteering will not happen. Right? So understand this. Government has established one authority under GST, that is, right, basically National Anti-Profiteering Authority. National Anti-Profiteering Authority. Right? In fact, they will write only NAA, National Anti-Profiteering Authority. Right? NAA, National Anti-Profiting Authority. Now, National Anti-Profiting Authority, the role of that is, if any customer complains that a company or a seller is not transferring the complete benefit to the customer, then they will conduct investigations. Or if the authority feels that, some companies involved in profiteering, they will conduct their own investigation, either through customer complaints or suo moto. They will only take the cognizance and they will start investigation. And if the authority finds out that the company is profiteering, then the authority will impose penalties on the company. The authority will simply impose penalties on the company, and in extreme cases, the authority can even cancel the license of the company. They can simply cancel the license of the company involved here. Right? So, were cleared by the GST Council, right? That is, anti-profiting measures were cleared by the GST Council. Authority was established in 2017. Now, there is a term called a sunset clause. Now, what do you mean by sunset here? Please remember this. Sunset basically means, right, the expiry date. Sunset is nothing but expiry clause. For example, please tell me, if you have purchased a packet of biscuit, is there expiry date on the packet of biscuit? If you purchase, let's say a soft, right, let's say a soft drink, right, will they not tell you consume it within 3 months or 6 months? If you purchase a packet of milk, is there expiry date, right? That is consumption before date given on this packet of milk? Of course, yes. So in the same way, when you set up an authority, when you have certain measures in the economy, can you have certain expiry date for these measures? Answer is yes. You can have them. It is entirely up to you. So that is basically given in the form of sunset provision, sunset clauses. Right? So the sunset clause for the anti-profiting authority was 2 years. That was 2019. And after that, again, this was extended by 2 more years, 2021. Then it was extended by 1 more year, 2022. And the latest information that I've come across, is that Government of India wants to close the National Anti-Profiting Authority and wants to transfer all the cases which are there with NAA to Competition Commission of India. They want to close the NAA and they want to transfer all these cases to Competition Commission of India. Done? Now please tell me any issue, any doubts regarding what we are discussing. Why we cannot sell the product at more than MRP? My dear, if you're selling the product at more than MRP, are you not, right, cheating the customers? Are you not cheating the customers? Are you not imposing a higher amount of money on the customers? Government of India says, right, you collect the right amount of profits, right? Government doesn't have any problem with that. But when government is reducing the tax, I hope you understand the point. Some of you will say, why should I not sell it at higher price? Argument here is, government is not saying don't sell it at higher price. Please understand the background to this. Government is saying, if I reduce taxes, you transfer the benefit to customer. You don't get the benefit. Are you able to understand the point I'm trying to make here? Government says, right, for example, you produce this bottle, right, and you can say to the government, I want to sell it at, right, 1 lakh rupees. Government says, sell it, right? That is your product, you sell it. If there are buyers, they will take it. If there are no buyers, you will incur a loss. But what is happening in this example? Understand that very carefully. What is happening in this example? Government has reduced GST. Government has reduced taxes. You don't get the benefit of those taxes. Customers should get the benefit of those taxes. And if you do not completely transfer the benefit to the customer, are you not taking the benefit of lower GST rate? Yes. Why should you get the benefit? Consumer should get the benefit. For example, those who are asking, sir, why? Why should I not be allowed to sell it at 108 rupees? Let me ask you a counter question. If the GST rate on a product is increased from 12% to 28%, if the GST rate is increased from 12% to 28%, now at the selling price of 100, in the first example, you will be selling it at 112 rupees. Let me know. You are selling it at 112 rupees. And when the GST rate is 28%, will you increase the price of the product to 128 rupees or will you increase the price to 115 rupees? You tell me what you will do. Will you increase the price to 115 or will you increase the price to 128? You will sell it at 128. Don't say 115. Then you are a very, very bad businessman. Don't say 115. You will sell it at 128. And if I am the customer and I will ask you, why? Earlier you sold it at 112, now at 128. Why? You will point your fingers at government and say, ask the Government of India. Ask the GST Council. They have increased the tax rate. What should I do? I am not getting any more profit here. Whatever profit was there earlier, I am making same profit even now. But because the GST rate has increased, automatically I have transferred the taxes to you. So when the GST rate increases, you want to put the burden on the customer. When the GST rate is reduced, you want to make more profit. Is it fair? Think, right? Is it fair? You want to be on a winning side always, right? You want to put the burden on the customer when the GST rate is high. But when the GST rate is low, you want to take more profit. Not at all fair. That is the reason government says, right? You earn profit. I don't have any problem. Earn profit. But please understand, transfer the complete benefit to the customers. Transfer the complete benefit. Okay. This is basically the discussion regarding GST. Profiteering is like the concept of greedflation. Yes, similar to the idea of a greedflation only. But please understand, greedflation leads to inflation. I hope you understand. Greedflation is basically related to inflation, right? But here it may or may not lead to inflation. Okay, done. Profiteering is tax on tax. How? You tell me. How profiteering is tax on tax? You tell me. There is no tax on tax in profiteering. Okay. Anti-profiteering measure is only applicable for essential commodities? No. Right? Any product that is covered under GST will come under anti-profiteering measure. Last point. What was the last point? Has a sunset clause, expiry date. Authority was set up in 2017. Authority will be closed after 2 years. Sunset clause. Okay. Now, right, please have a look at the data. This data was given in this year's economic survey. Please do not by heart any numbers. Do not waste your time. Do not complicate it. Right? Don't by heart anything. Make observations. Please make observations. Now, please tell me, right, the taxes collected over a period of time, pre-GST and post-GST. Can you find the differences in how much taxes we have collected before GST as well as after GST? Please make observations. Please do not by heart anything. Just observe. There's a term called as buoyancy. We'll discuss that later. Have patience. So please make observations. How much taxes they would collect, that is the states would collect separately before GST and the central government would collect before a GST. And what has happened to the GST collections right after the introduction of GST? Can I make one observation? Let me know. Can I make one observation? You remember that much more than sufficient. The amount of taxes collected with the introduction of GST has increased. Any problem? Amount of taxes collected under GST regime has increased compared to pre-GST regime. Right? Compared to pre-GST period, now the taxes collected have increased. Just make observation. Do not waste your time by hearting. Now, what is this buoyancy? I'll discuss that. Just give me some time. What is the concept of tax buoyancy? I'll tell you. Now, come to the next concept. That is, what are the concerns related to GST? What are the problems related to GST? Right, first one, compliance burden. Compliance burden. What do you mean by compliance here? Compliance simply means what is the cost or expenditure? What is the cost or expenditure incurred to implement guidelines? To implement guidelines or measures. What is the cost or expenditure one must incur to implement guidelines or measures? What do you mean by this? Let me ask a very simple question. With introduction of GST, please tell me, should every seller, even shopkeeper, restaurant owner, raw material supplier, should every seller, should they start printing receipts, bills by the way? Think of it and answer to me. With introduction of GST, now is it mandatory for everybody in the system to keep on printing bills? Some of you are saying no. Again, my dear, don't say sir, but this shopkeeper, right, this tea seller, right, this person who is selling idli vada on the roadside, puris, parathas on the roadside, they are not giving me bill. My dear, they are not registered under GST. Simple, they are not registered under GST. They are not registered because these are very, very small units, informal. Informal units are there in India. So please understand, everybody who is registered under GST, they are supposed to generate receipts now. They are supposed to print receipts, right? Print the bills. Now, please tell me, for this, will you incur certain expenditure? For this, will you incur certain expenditure? Otherwise, I'll give you one more example. Imagine you're running a business. You're running a business, very small business, by the way. You're running a small business. Now you're supposed to file all these documents to the government authorities. You'll have to submit all of these documents. You'll have to be registered online. You will have to submit these documents on monthly basis in some cases, quarterly basis in some cases. Now, please tell me, are you an expert in filing of all these documents? Of course, right. Many of the people will say, sir, I don't even know, how to get registration number. Now, for that case, you will have to approach, somebody such as a chartered accountant. Now, chartered accountant, will they provide the services free of a cost? Of course, no. So, argument is very simple here. Argument is very simple. Whether you are doing it by yourself or you are hiring someone else, please tell me, to implement the measure that is a GST, will your expenditure be there or not? Will you incur expenditure for this? That is basically a compliance burden. That is basically a compliance burden. Now, many of you will simply say, but sir, earlier also, earlier taxation also, I hired a CA. My dear, please understand this. Earlier, whatever is a VAT system, you have, over a period of time, you have understood how VAT works. Whatever was the registration process, over a period of time, many people would have understood it. Now, suddenly, there is a new taxation structure. Suddenly, new filing process has been introduced. Suddenly, a new format has been introduced. You do not have the expertise, you do not have the time or the knowledge to understand everything. You will take outside help, you will outsource it, you will hire expert, which will mean that you will have to spend money. So, compliance burden is one issue. Multiple tax rates is another issue. I've told you what is the problem with multiple tax rate. Revenue protection. Please tell me, in the last one week, or let's say last 2 weeks, have you come across tax evasion under GST? Let me know. If you have not come across, means you are not reading newspaper very carefully. If you don't trust me, type it in Google and type Hindu only. You will get it. So there are a lot of tax evasion cases that are happening. Lot of tax evasion cases. Now, many of you will ask me, sir, how tax evasion can take place? Under GST, how can it happen? I'll give a very simple example. Imagine, I will give you a bill. I will give you a bill which says you have paid a GST of 10 rupees to me. Simple. I will give you a bill which says you have paid 10 rupee GST to me. But in reality, this bill is a fake bill. This is very, very famous now, or infamous. People have been arrested because of this. I've given a bill to you which says you have paid a GST of 10 rupee to me. Now you will take that bill, submit it to government, you will get the ITC from the government. You will get ITC. But in reality, is the bill genuine? Let me know. In reality, is the bill genuine? Bill is a fake. Bill is a fake. There are fake companies which are set up. Trust me, These are all there in the newspaper. Have a look at it. There have been fake companies which have been set up to generate fake bills so that government can be cheated of the GST revenue. So, lot of tax evasion that has been taking place. So, revenue protection is also a problem for the government under the GST. And finally, there are also certain exempted goods. We cannot have a GST and certain goods which are out of GST. We will have to bring these exempted goods under GST so that we can achieve the objective of one nation, one indirect tax. Any problem here? Any problem here? Please do let me know. Sir, how second point is a concern? My dear? Because of multiple tax rate, is there inverted duty structure? Let me know. Is there inverted duty structure because of multiple tax rates? Is it becoming difficult to administer with multiple tax rates? That's the reason I'm saying it is a concern. We will have to address it. What is a composition scheme? Composition scheme basically means, okay, composition scheme basically it's a type of scheme under GST only. Government says you do not have to, right? Understand this. You do not have to pay different rates, right? You do not have to collect from the customer at different rates of GST, right? All you need to do is pay out of your revenue, pay a fixed amount of taxes to government in the form of GST. Is it okay? Fixed amount. Fixed amount means, let's say composition scheme, 5% rate is there. In fact, under composition scheme, 6% is there, 1% is there. So you do not have to be worried about different rates of GST applicable to you. You can simply take, let's say, 6% if you're covered under the composition scheme, or let's say 5% under composition scheme. You will have to pay 5% of your total revenue to the government in the form of composition scheme. That is GST. Okay. Again, don't worry about all of that. Arey Baba, right? Most of you are asking every point. Did we not discuss all of these points separately? Then what are you listening to? Please tell me, is there exempted good under GST? Those are asking, right? I'm actually upset with you people. Why? I'll tell you again. Don't take it negatively. Please do not take it negatively. Upset in the sense you are not listening carefully. Please tell me, are there any exempted goods under GST? Let me know. Are there any exempted goods under GST? If you simply say, sir, no, you have not told regarding anything under GST exemption, then my dear, what did you listen to when I discussed this? What did you listen to when I discussed this? Right? So can you have GST separately and exempted goods separately? No, you cannot have it. You will have to bring all of the goods under GST. Right? This is my concern generally with the students. You people do not listen to the class carefully. Right? Revenue protection. I said fake bills are getting generated. You will claim the ITC, input tax credit, from the government, but government, because this is a fake company, is not going to get the 10 rupee tax. So government is concerned, right? Government is concerned about the GST fake bills. Okay, that is basically the revenue protection point here. So all these are some certain concerns. Please go through them. You'll have to give right these as a concern and way forward if at all a question is asked in UPSC. Revenue protection is general issue, not specific to GST. My dear, even in GST, is there a loss of revenue for the government? Yes. Right? Do not complicate it. Don't say this is very general, not in GST. In GST also, revenue loss is incurred by the government. I've written the same thing there. Okay. Now come to the more concepts. Tax buoyancy, tax elasticity, tax expenditure, tax to GDP ratio. I'll discuss all of them one by one. Please follow the discussion. Please follow the discussion. Let me start with the fourth one, tax to GDP ratio. Tax to GDP ratio. Now, what is the meaning of tax to GDP ratio? Imagine total amount of taxes collected by the government is, let's say, 100 crore rupees, and the GDP value is 500 crore rupees. Can I say tax to GDP ratio is 20%? Anybody has a problem? Please do let me know. Right, the amount of taxes collected by the government is 100 crore. GDP value is 500 crore. Can I say tax to GDP ratio is 20%? Point number one. That is, it is the ratio of total taxes by total GDP value. That's a definition. Now, point number two, tax to GDP ratio should be higher. Point number two, tax to GDP ratio should be higher, should keep on increasing. Should keep on increasing. Why? Please understand, if the tax to GDP ratio keeps on increasing, can I say it simply means taxes collected by the government are increasing? And if the taxes collected by the government are increasing, don't you think the dependency of government on borrowings automatically will start going down? Anybody has a problem with the second point? Anybody has a problem with the second point? It is basically the application of why taxes should be imposed by the government. If the tax to GDP ratio goes up, it simply means the government is collecting more taxes. And when government is collecting more taxes, it simply means more money for the government, less dependence on the borrowings. That is the implication for you. Right? And the third point, what about India's tax to GDP ratio? Right? What about India's tax to GDP ratio? India's tax to GDP ratio is on lower side. It is generally right below 20%. From one year to another year, number will keep on changing. Next year, when you come across an economic survey or budget document, please by heart from there. Don't worry about old data. Annually, government will give you that data. Please by heart from there. So tax to GDP ratio is less than 20% in case of India. But if you compare other countries, right, in case of other countries, the tax to GDP ratio is in the range of 35%, is in the range of 40%. For example, do you remember the acronym OECD? Let me know. Do you remember a group of country by the name of OECD? If you ask me, sir, you have never used it in the classroom, yesterday itself I've used it. In case of OECD countries, the tax to GDP ratio is around 35%. The tax to GDP ratio is around 35%. 35%. That's a very, very high number. Right now, many of you will ask me, in that case, sir, why is the tax to GDP ratio lower in India? Can I say these are the reasons? One, tax avoidance. Please tell me, does it make sense to you or not? Tax avoidance. Second one, tax evasion. Second one is a tax evasion. And the third one is basically tax expenditure. I'll discuss this. Basically, tax expenditure. Don't worry about tax expenditure. I'll discuss it. Listen first. Okay, so because of these reasons, the tax to GDP ratio in case of India is a lower. Anybody has a problem? Can I go to the next concept? Right, there are two students who are very, very weak in CSAT. My dear, 100 upon 500 is 20%. 100 upon 500 is 20%. Do the calculation, take out your calculator, do the calculation. It is as good as saying 1 upon 5. 1 upon 5 is 0.2. 0.2. But if you write in percentages, it will become 20%. Okay. Tax and GDP are increasing simultaneously proportionally. Not necessarily. Not necessarily. Right? Necessarily, they will not increase always in proportion. Right? No, it will not happen. Okay. Can we go to the next one? And also agriculture has no tax. Generally, that is not taken as a concern because in case of India, historically speaking, understand this, at the time of independence, around 70%, around 70, right? Some authors will say 73, some authors will say 71, around around 70% of total GDP came from agriculture sector. And around 53% of the population which was working was there in agriculture sector. And that is a precise reason, right? Even today, situation has not changed by much. Even today, situation for the farmers is not very highly improved, right? Highly improved in the sense compared to other population. And that is the reason agriculture sector doesn't attract income taxes. Right? Agriculture sector does not attract income taxes. That is, farmers do not pay income taxes. That is what I'm saying. Okay, done. Right, so this is the tax to GDP ratio. Let me go to the next one, tax buoyancy. Let me go to the next one, tax buoyancy. Now, what do you mean by tax buoyancy? Let me explain. Right, imagine this year, taxes collected are 100 crore, GDP value is 500 crore. Next year, taxes collected will become 120 crore rupees and the GDP value will become 550 crore rupees. Can it happen? Of course, yes, it can happen. Please understand, it can happen. Many of you ask, sir, how is that possible? It's never possible like this. It will never happen. Let me give a very simple example. Simple example. My dear, tell me, if next year Government of India says even the farmers will have to pay income taxes, is this possible? Think of it. Simple question, by the way. Right? Those who will say, no, sir, if this will increase by 20%, this also has to increase by 20%. Not necessary. Not necessary. Tomorrow, if Government of India says all the farmers will also have to pay income taxes, can this happen? Of course, yes, it is possible. Tomorrow, if government of India will eliminate tax evasion, right? Let's hope so. Tomorrow, if government of India eliminates tax evasion, can this happen? Of course, yes. So understand the hypothetical argument here. Taxes will increase from 100 to 120 crore. GDP will increase from 500 to 550 crore rupees. Can I say tax buoyancy? The formula is simple. Tax buoyancy is the percentages change in the tax and percentage change in the GDP value. That is nothing but 20% divided by 10%. Any difficulty? Those will start asking me how 20%, how 10%, right? Use the calculator. Although UPC will not give you this calculator, use it now. So the numerator will change by 20%, denominator will change by 10%. Can I say tax buoyancy is twice? Tax buoyancy is 2 times. Any problem with this? Now, what is the importance of this number? What is the importance of this number? Importance is that tax buoyancy will basically make a connection between how the taxes collection has changed to how the GDP has changed. If GDP has increased by 1%, what is the meaning of tax buoyancy or 2? If GDP has changed by 1%, your taxes collected have changed by 2%. Now, based on this, don't you think having a higher tax buoyancy is always preferable? Think of it, right? What is the inference that you're drawing here? If GDP is changing by 1%, your taxes collection is changing by 2%. So does it make sense to you if I say tax buoyancy should be higher for a year? Tax buoyancy should be greater, which indicates compared to GDP changes, your taxes collection is changing by a much faster number. That is always preferable. That is always preferable. Now let me prove it. Let me prove it to you. What was the tax buoyancy before GST collection for indirect taxes? Make the second observation from the table now. What was the tax buoyancy for indirect taxes collection before GST was introduced? It is there in the table. The tax buoyancy was less than 1. And what has happened to the tax buoyancy after the introduction of GST? Please look at the right side now. Please look at the right side in the table. The tax buoyancy is more than 1. More than 1. More than 1 from lesser than 1. So don't you think GST has benefited government by increasing the tax revenue collection? Think of it. GST has benefited government by increasing the tax revenue collection. Of course, yes. That is basically the concept of tax buoyancy. Tax buoyancy measures growth rate in tax revenue collection as a response to overall means GDP growth rate. How is the taxes collection changing compared to overall GDP changing in the economy? That is tax buoyancy. Come to the third one, tax elasticity. Right, understand the second, in fact, in sequence, the second one. Right, the second number, understand the difference between tax buoyancy and tax elasticity. Tax elasticity measures growth rate in tax revenue collection as a response to the tax rate change. Don't say both 1 and 2 are same. Please make observations. Tax elasticity is if you change the tax rate as a response to this, as a result of this, how much is the changes in the taxes collected? That is basically tax elasticity. Is the tax elastic? Is the tax less elastic, more elastic? What is it? For example, if government of India will change the tax rate by 1%, overall tax rates will change by how much percentage? Simple idea. Right, I'll repeat it again. If the government will change the tax rate by 1%, overall tax collection will change by how much percent? That is called as a tax elasticity. Any problem in understanding this? Right, 1 is different, 2 is different. Right, both are different, don't say one and the same. Come to the third one here. Serial number 3, tax expenditure. What do you mean by tax expenditure? Let me give a very simple example. Earlier example only. SEZ. Do you remember SEZ? Let me know. Do you remember SEZ? Special Economic Zone. What is the speciality about special economic zone? For 5 years, 100% tax exemption is provided. 100% tax exemption is provided. For 5 years, 100% exemption is provided. What do you mean by 100% exemption? A company earns a profit of 100 crore rupees. If it is within SEZ, if it is under the special economic zone, they will pay 0 rupee tax. If it is outside SEZ, domestic tariff area, they will pay 30 crore rupee tax, assuming 30% is the corporate tax rate. Now, please understand this carefully. Can I say that with introduction of special economic zone policy, Government of India is foregoing or sacrificing a tax revenue of 30 crore rupee in this example? I'll repeat the statement. Listen to this very carefully. Can I say, by introducing the policy of special economic zone, in this example, government is sacrificing, government is foregoing 30 crore rupee tax revenue. Anybody has a difficulty here? Please do let me know right now. Anybody has a difficulty in this? Right, because we have SEZ, I will not collect the taxes. You might earn 100 crore rupees, 200 crore rupees. I will not collect corporate taxes from you. So whatever taxes I was supposed to collect, I am sacrificing it now. I am foregoing it. This is basically tax expenditure. This is basically tax expenditure. So tax expenditure refers to the tax revenue that is foregone. Foregone means not collected. The tax revenue foregone by government because of its policies. Because of its policies, how much tax revenue will be foregone, right? That is called as tax expenditure. Now, please tell me, come to this point here. Please look at this point. Please tell me, can I also say one of the reason why tax to GDP ratio is lower in case of India can be tax expenditure? Let me know. One of the reasons why tax to GDP ratio could be lower in India is because of tax expenditure. Right? Of course, yes. Because whatever revenue they were supposed to collect, they will not collect. Right? Because of certain rebate. Rebate means collect and give it back. Rebate is nothing but collect and give it back. Right? Certain rebates, certain exemptions, right? Certain exceptions, etc. So these are 4 very important concepts related to taxation. Please be very careful. Lot of times these have been asked in UPSC prelims. UPSC prelims. Any difficulty here? Any difficulty? Now let me know whether this makes sense to you. If tax to GDP ratio, right, understand this. If you're talking about tax to GDP ratio, can I say from last year to this year or in the last 1 decade, if tax buoyancy is very high, tax to GDP ratio will also start increasing. Let me know. Right? Does it make sense to you? Right? In the last 1 year to this year, if right tax buoyancy is very high, can I say tax to GDP ratio will also start increasing? Does it make sense to you? If UPSC will ask you these kind of questions, will you be able to answer this? Right? Right? Understand the concepts. Always focus on the concepts. Okay? Done. Right? So, what are the issues related to taxation structure? Overall taxation structure in India, loss of revenue because of right tax evasion, tax avoidance. Most of the economy is not covered under taxation. What do you mean by most of the economy? There is a term called as informal economy. There's a term called as informal economy. What do you mean by informal economy? Informal economy refers to that part of the economy that is not covered under any laws, that is not covered under any of the act of the government. Is the logic okay? I'll repeat it again. What do you mean by informal economy? You are talking about that part of the economy which is not governed, which is not covered under any of the laws of Government of India, or for that matter, even the state government. Simple example, right? Many of you will ask me, sir, what is the example? A very simple example is, what about those people who are selling, right, let's say food on the street side? Very, very simple example. What about those people who are selling food on the street side? Do you think they're registered with the government? Again, some of you might simply say, yes, sir, I've seen one person who is registered. Most of them will not be registered. Most of them, they will not be registered with the government. Now, if these are not registered with the government, do you think they will have guaranteed salary? Think of it. Do you think they will get guaranteed salary? They will get, right, guaranteed, let's say, social welfare? No. So informal economy is not covered. All the informal economy is not covered. But having said so, please understand my next point also. Is Government of India doing anything to provide protection to all of these people? Next question is the Government of India or even the state governments, are they doing anything to provide protection to this? Of course, yes. For example, have you read that article? I have asked you to read it, but have you read that article regarding Rajasthan government's new bill? Rajasthan government's new bill where they want to provide social security benefits to these kind of informal workers. Yes or no? Right? So even the central government is doing something, state governments are also doing something. But having said so, please understand, you cannot implement these policies overnight. You cannot implement these policies overnight. It is very difficult to implement these policies overnight. I'm not talking about gig workers. Some of you are asking, sir, is it about gig workers? No, I'm not talking about gig workers. I'm talking about income protection. There is a bill, right, to provide income to this kind of people who are there in the informal economy. Right? We will discuss that later. Don't worry. That is, what do you mean by gig worker? What do you mean by platform worker, etc., etc.? We'll discuss that later when I take up employment. So most of the economy is not covered under taxation. Government provides a tax exemption to a lot of these taxpayers. Corporates get tax exemptions. Individuals get tax exemptions. As a result of this, tax expenditure bill is higher. That will have a impact on tax revenue collected. And there are a lot of